Hello, welcome to Geojit Spotlight. Today we are unpacking the outlook for India's southwest monsoon in 2026. The rains are expected to fall short, with El Niño is making a comeback and the economic fallout could be meaningful. Let's break it down. The IMD's revised forecast puts monsoon rainfall at 90% of the long period average, lower than the first forecast of 92%. Critically, the probability of deficient rainfall has jumped from 35% to 60%, with only a 40% chances of normal rains. El Niño is expected to build from weak in June to moderate to strong by September. Now, before we take these numbers at face value, let's look at how accurate the IMD's has been over the past 5 years. Over the past 5 years, the IMD's track record has been solid. Forecast for 2021 through 25 came within 2 to 3 percentage point of actuals. But 2018 was a notable miss. Forecast at 97%, actual at 91%. For 26, with a margin of error of plus or minus 4%, outcome could be range from 86% to 94%. Let's talk about who wins and who loses. On the negative side, tractor, two-wheelers, FMCG and sugar all face headwinds. Tractor growth is expected to moderate in H2 of FY27 after a surge in last year. Two-wheelers similarly moderate to 3 to 5% by FY27. Sugar is most exposed, with El Niño historically triggering 20 to 30% production drops in key states like Maharashtra and Karnataka. On the positive side, power demand grows as cooling loads rise and solar generation benefits from clearer skies. Room air conditioners are set for a volume recovery after a weak FY26. Cement and cotton fall in between. Overall demand holds up, but rural segment face pressures. Here where the macro pictures get uncomfortable. The supply shortage in crops like cereals, pulses and vegetable push up food inflation, lifting overall CPI. Rural CPI has climbed to 3.7% by April 2026, skewed by West Asia conflict, pushing up fuel and fertilizer cost. Real rural wage growth has dropped and rural consumer confidence declined sharply in March 2026 after the escalation of West Asian tensions, given its impact on gas and fertilizer availability, as well as potential development of El Niño condition. Here is the silver lining. Reservoir storage sits at 33% of capacity as of late May, above last year's 30%. And well above the 10-year average of 27%. Rice stocks at 39 million tons and wheat at 42.8 million tons are both comfortably above buffer norms. So the risk isn't immediate scarcity, it's trajectory. If monsoon replenishment disappoints through June to September, these buffers will erode and the rabi season will feel the pressure. To wrap up, below normal monsoon, building inflation, softening rural purchasing power, but healthy reserves providing a cushion. The season's progression is the one to watch. Thanks for listening.